It's the crypto coach here. Let's dive into 3 quick tips for beginner traders in the markets. Starting with tip number 1, learn cheap. You don't know what you don't know. Every trader who becomes consistently profitable wishes they heard this advice or listened to this advice when they started out, because we all pay a tuition fee in the markets. We all have a cost of learning. However, you get to decide how big that cost will be, because you can dollar trade and learn slowly, gain experience in the markets, build winning systems, and if all goes wrong, you lose a maximum of, let's say, $50 or $100, $200. That's, of course, assuming you lose 200 trades in a row, or assuming you lose 100 trades in a row if you are dollar trading, which will take some time to do and is the worst case scenario. That's much better than blowing up your entire savings like we know so many traders out there do, because they want to go all in from day one. And it's funny because take anything else, take boxing for example. Day one in the boxing gym, you don't go and spar prime Mike Tyson, do you? You learn, you train, you build years, if not decades of experience before you ever get to the pro stage. And you only even do that after you've proven yourself in the gym, then in the amateurs, and then in the pro scene. And finally, you may build yourself up to championship level if that is what you have reached. It takes effort. It takes proven record in order to actually reach that. And so should trading. You shouldn't scale your risk up to your maximum portfolio risk from day 1, day 30, often even year 1. You should be able to accept that if you are serious about learning the skill of trading, for the first year, fully come to terms with the fact that you may not see a profit at all. And that if you do want to scale up your risk and make this a full-time thing for you, then you have to go from $1 risk per trade, scaling slowly up to $2, up to $5, up to 10, up to 20, up to 50, and slowly up to what I recommend is 1% of your trading portfolio risk per trade. You have to prove yourself. Just like in any other field, you have to build the record, build the resume to prove yourself, to fight those bigger names. So if you keep that mindset when it comes to trading and you respect the markets, much like you respect Mike Tyson, you respect the professional boxers, then you will at least, at worst case scenario, lose a minimal amount of money if all fails. And if everything goes successful, and best case scenario, you build the skill of trading and becoming consistently profitable, which stays with you for life. And you didn't blow up your entire net worth in doing so, because nobody wants that. You don't need to do that to become consistently profitable. The slow way is the only way to becoming successful as a trader. So you hear all the horror stories. Often in trading, all you have to do is the opposite of what the average trader does, which is going into the markets with their full risk from their first month, even first year as a trader. If you at least give yourself the chance and scale up slowly with a rational, logical plan, then you're going to do much better and be much better off whether you become successful or even fail in the markets and figure out trading isn't for you. So learning cheap is always the best way, because guess what, guys? The markets are not going anywhere. Bull market, bear market, the cycles have existed before we were all alive, and they'll continue long after we're gone. So there is no rush. You can do things the right way. I strongly urge that, as hard as it is, because we're all impatient as traders. That's the trait we all have, because you almost need that trait to become a trader, because you have to have a certain level of risk tolerance. Those who are too patient often never even go into the markets because it's just not something they'd ever be interested in. So the same traits that get you interested in trading can be your downfall, and you have to really wire yourself with systems, with plans, in order to follow the right process. So learn cheap, tip number 1. Next up, tip number 2 is Systematic over discretionary trading. So the sooner you learn to build systems in the markets following objective rules to enter your trade, for your stop loss, your invalidation for a trade, that then allows you to manage your risk in every trade before you ever even open it. You then have a exit rule to take profit on that trade. That allows you to also backtest the system and pick up data on the system, and then only trade systems with data that's proven to be profitable. You're not going in blind into the markets, unlike discretionary trading, which is where you trade off your hunch, your emotions, what you feel. Maybe there's some sort of technical analysis with it, but it's not objective. You don't repeat it every time. And if you can't repeat it, guys, how are you going to make consistent profits? And if you can't make consistent profits, you can't be consistently profitable. Every profitable trader I know adopts at least somewhat a systematic approach. When you get more advanced, sure, can you add elements of discretion in? Yes. But I do not know a single consistently profitable trader, and that means over 1 year of being consistently profitable. Anyone can have a good year, guys. Being consistently profitable does require at least a year of profitability proven. Everyone that I've met has that systematic base, and none of them adopt a fully discretionary approach in their trading. So just from that alone, you can trust that a systematic approach is the way to do it. And again, comes back to what I said. What does the average trader do? We know 90% of traders lose over time in the markets. Well, none of them have a system. None of them have a back-tested system if they do, let alone a live-tested system, let alone scaling their risk slowly and learning cheap. Most of them all just go long and short based off news, a hunch, emotions for the day, and really have no plan or risk management because of that as well. And that leads to huge risk in the markets. Potential for blowing up is high, and if you blow up, you're out of the game. Trading is a cash multiplication skill, not a cash flow skill, so when you lose money. And the money is your oxygen, it's your life force as a trader, because without it, you can't trade. Unlike a job where if you perform well or don't perform well, you're still going to get your salary. Trading's not the same. You can perform good or bad. You can stick to your systems, or you can trade discretionary and still lose in the markets. But at least if you have data-backed systems, with the law of large numbers, you set yourself up for the best chance of success rather than just trying to wing it and hope for the best, because hope is not a trading strategy. Emotions are not a trading strategy. Discretion is not a trading strategy. So the quicker you adopt a systematic approach, the better. As hard as it is as traders, I get it. I'm not an idiot, guys. I know all of the emotions you experience as you learn trading and all of the things that make you want to become discretionary and deviate from the process. But I also know that every consistently profitable trader I know has a systematic base in all of their trading. So you have to blindly follow the people that you want to be like, the people you aspire to be like at times, over your own judgment, which is often not valid since you simply don't have the same experience as them. So you have to be humble in the markets and accept that. Tip number 3, low time preference. What this means is you need the ability to delay gratification. Those who are trying to chase quick money in the markets, who are focused on the money, focused on the outcome, are always the people that lose and always the people that blow up, because they're not understanding that compounding is the magic, is the secret sauce. They're not understanding that trading is a cash multiplication skill. The more capital you have, the bigger your returns are going to be, because it's all percentage based. They don't understand that trading's not linear. It's not a salary coming in every month. You can have 2 months which make up for 80-90% of your returns for the year. You have to have that patience. You have to be able to say, I understand things take time, but I know that assets over the long term go up and to the right. I know that I don't need to catch a hidden gem or 100x leverage long from the bottom to become successful as a trader. I just need to stack the chips over time, continue compounding, because that alone, surviving in trading, that is a full-time job on its own. And it really is those who have that short-term preference, that high time preference, who cannot delay gratification in trading, in business, who always fail because they quit after a few months when it goes wrong. They can't stick to the process. They're fully focused on the money. And when you're fully focused on the money, it's very hard to stick to your systems, stick to your morning market analysis routine, remain anchored to your risk management because you're always trying to see how much you can make. And then greed comes in, emotions come in because you're focused on what you can do with that money rather than just simply following the process, building the skill, and letting profits be a byproduct of sticking to that process. Because time in the markets beats all. And if you don't at least give yourself the opportunity to spend time in the markets, you may never even know if you could have been a good trader or not, because you had that high time preference and you were just focused on the short term, trying to make quick money, quick returns. Doesn't work like that, guys, because there's always a billionaire who makes $100 million just off a 10% gain, while you look at that with $1,000 portfolio, $2,000 portfolio, and think, pointless move, I need to go 100x leverage long. No, that's not the mindset. So yes, it's a cash multiplication skill, meaning yes, you do need to have cash flow. You do need to build a stack to actually make trading worthwhile. And if cash flow needs to be a focus for you, then that is what you need to focus on first before you can become a trader. But you can trade profitably part-time when the time is right. And if you learn cheap and actually survive in the markets, you can potentially move to full-time. But overall, it all comes down to having that low time preference, understanding that in the markets, it's a career that can last a lifetime. There is no rush. And if you don't rush it, you allow compounding to take over, like Buffett's, all the big names, Stanley Druckenmiller, Paul Tudor Jones. They all understand the power of compounding, the power of surviving, stacking the chips year on year, because the big years will always come. As long as you survive, as long as you can delay gratification as a trader, you will do better than most who are trying to chase that short-term gain and focusing on the money. So that's my best advice. 3 tips for beginner traders. Let me know what you think of them below.